Alright, what's up people? So today, on today's YouTube video, we will be going over some of my past trades, and we're gonna go over redefining winning and some of those certain things today. So if we hop on the charts, and we'll go on to the hourly chart. So I'm gonna start from just the bias that I had going today, my trades today. And I'm going to go over my trades yesterday. Well, actually, you know what? We'll go over my trades yesterday first. So I'll pick this up. We're going to go over to yesterday. So yesterday I took a loss on my live account, and I'm fine with the loss. I was looking after it, and it was a good loss. So, like, if I was willing to take a loss, it would be this loss. So this was the trade. So this right here is actually what happened during FOMC member speaking. So we get that move down, and then we get that quick move back up, inverting this fair value gap. And so this is a high probability fair value gap. So when price comes back down in, sweeping this low, so we create a low here, sweep the low, tap back and hold the body. We create one singular fair value gap. It's not two, just one. So it's high probability, and we have equal highs right here. Price inverses this, closing right above without touching this external more like an internal high, but the high that created this fair value gap. And I enter in, and price just immediately stops us out. And sometimes it's going to happen like that, sometimes. But you just got to get good at taking that out. So talk about yesterday, talk about the 10K. Oh yeah, so I started a 10K funded challenge. And this is actually kind of interesting, but I'm going to just be trading with micros. So it's a 10K funded account. You have to get to 1K, so it's a 10%. So 10K to 1K. 10% usually would be harder, but I forgot that you can see me now. 10K used to be a little bit harder, or 1K, 10%, but since it's just 1K and you're still trading futures, so you can just use a mini contract to trade as if you were trading like that on a 100K account. So we had, and this was a trade that I predicted opposing the last trade. So the last trade I think I lost right here, but if we look here, we get this. So this low was swept by ES. So this is SMT, because we reject off of this rejection block for NQ, but ES manipulates and takes out this low. And after I saw that, I was already looking bearish or bullish. And then once we see that there's one fair value gap here, this fair value gap's inverse before this high is taken out. Pretty much equal highs, relative equal highs, and there was still the equal highs from before right here. So once price inverses this, almost taps back in, but you would find your entry right here. That would have been a good trade. So, okay, we're going to go over now. So coming into today, this is after the NVIDIA earnings yesterday. And I was looking bullish. I was looking to take longs because price was obviously looking very, just the order flow was bullish, so you can't really deny that, especially when you're going to look to trade. I had lifting and stuff this morning, so I wasn't really looking to trade that much. I was looking to definitely predict price and stuff, just kind of tape read and stuff. So going into the day, I wasn't really watching any of this, and then what was it? I started to watch, and we got this sweep of the high right here. We invert. I was watching this, and I was telling my friend, who I also trade with, we are going to react from this as if it was just a normal an inverse fair value gap. This is my model. So my model, technically, mechanically, I would have entered here. My stop loss would have been probably around this high right here. My take profit would have been this low right here, or this low. So you have 29 to 12, 12 points, times 5, 10 times 5, 50. Yeah, it's not like that bad. So there's that trade, and this is the trade that I was looking to take. So this is the macro right here. So once we hit the macro, because we had news at 10 o'clock today, so I had to make sure that I was trading after the news in order to not get fucked up. So this is the macro right here. So during this time we were likely to see that entry, and as you can see, during this time we sweep this low, we purge the low right here. So we purge this low, then we start to move up higher. We then invert this fair value gap, and as you can see, there's not fair value gap here, 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 and here. There's zero. There's one nice clean one right here. We take out this high, or not we take out this high, we close back above. Yes, it was with a lot of displacement, so if you entered up here with your stop close below, I mean, you would have been risking a lot more. But if you waited to find your entry maybe in this fair value gap with your stop loss right here, you would have been fine. You would have been targeting these highs right here. Technically this high, mechanically this high, so you would have scaled 50% off at least at this high, which is, I mean, it's a good 26 points. So there's this trade, and then there was, we inversed this fair value gap here, didn't respect it, inversed. I wasn't really looking for trades after this because, I mean, once you predict a 50-point move, there's nothing really else to do in the market because that means your job is done. I was watching this, so price comes back down into this obvious fair value gap. We reject it. Oh yeah, this is the one. So this is what I took on my micros with my micros, but I didn't scale it enough, so I didn't really make enough money off of it, if you know what I mean. So we inverse this fair value gap. Yes, there's this fair value gap here, but the thing with this is it's pretty high up. So what you're able to do is you're able to use it as a target. So if you found your entry here, you could use this as a target. So you could scale some off actually at this high, and then you could have been able to move your stop loss to break even and protect yourself and allow this high to be hit. So I entered in, price came back down, and then you could have, your stop loss would have been right here. It's a little bit wider. I mean, technically it would have been right here, but there's a chance this would have filled, so you would have want to had it a little bit lower just so there would not be a hard stop on this trade. And there was also this inverse after. Oh yeah, so I took that win, and then I got stopped out on one right here when I tried to enter back in this order block, because as you can see right here, we closed above. There's an order block right here. So the consequent encroachment of that order block, I found my entry to my next trade. But, you know, it kind of just failed. It wanted to tap a little bit lower, and as you can see, it tapped back into that fair value gap that I pointed out earlier. And then it started to go higher, and as you can see, I predicted this huge move. So yeah, and then there was, I was looking at this, could have been a good one, but as you can see, this actually, now looking back, this one right here was a better one. I mean, you could have even had this high been taken, tapping back into this fair value gap, closing above it actually, but still tapping back into it. Alright, so I'm going to delete all of these off my screen. And I'm going to kind of just start talking about redefining winning. I think I was talking about this earlier, but you know how, I mean, if you are finding your true joy and you are winning, like that, winning, that dopamine rush when you win, if that will only come when you pass your funded, make $100,000, take winning trades day in, day out, never lose, then you're never truly going to be happy. And if you're never truly happy or content or feel like you've taken a win, then you have no momentum to build off of, and you also don't have, you're not truly yourself in that moment. And you have to truly be yourself when you're trading, because the only thing you can control when you're trading is the mind you bring, like, into the moment of a challenge. Everything else is just completely irrelevant. So what successful traders are able to do is they're actually able to, you know, disconnect their sense of worth or the adequacy or anything, their sense of mattering, from their trading performance. And that also means that when they win, they don't get overly happy like somebody who gets their happiness from winning. But that also helps them, because on the flip side, when they lose, it doesn't hurt nearly as much. Because if you only find happiness from winning, well, it's obvious. What is losing going to do? It's going to fucking hurt you. It's going to kill you. So you have to notice these things. You have to notice, if I really like this one thing, if I don't get it, my mind is going to do this. So you have to kind of control that. And by doing that, you get your worth and your sense of mattering from being able to follow your plan, because you're grounded that, and you understand that when you follow your plan, you've set up, you've back tested, and all these things, that you are able to get to, I mean, become successful. But the thing is that you have to follow your plan consistently, and many won't do that because they'll end up falling for the idea that the idea of, you know, just making it. They want to make it so bad that is, they have just outcome-based goals, when that's not good. You can't have outcome-based goals. You have to have performance goals. So you can't be happy because you won money. You have to be happy because you followed your plan. Happy because you didn't break a rule. And day in, day out, over time, if you do that, you will be successful. But if you, day in, day out, you're happy because you won, sad because you lost, happy because you won, happy because you won, sad because you lost, bro, your money's gone. So it's really important to redefine winning, understand your losses, and also kind of over time you start to fade out. You get so into trading that you forget that how many wins you're taking. Like, you kind of just forget them. You forget that you predicted a 50-point move today. Like, if you were at the charts, there would have been a 50-point move. Normal traders don't do that. So you have something special. And you have to take harness of it and really just force it into what you're doing. So the thing with winning, and it's not just because you're greedy and you want to win, which it may seem like, but you want to win because once you start winning, it's a lot easier to take more wins. So if you're a loser, I don't know, you play basketball, all you do is lose. You've lost 100 games in a row, 100 games in your life. Let's say you've played 110 games. The odds of your next game being a loss are pretty high. Now, if you did the opposite, the odds of your next win are going to be pretty high. Even smaller. If you've only taken 5 losses, you've played two wins. Your chances of a loss are way higher. So you want to put the odds on your side. And by doing that, you have to win, because once you start winning, you win more. So if you're able to think you're starting to win, your mind will act as if it is winning. Because, I mean, it's hard to say you won when you're not really making money. So you have to find the value of a win in something else. So I find the value of a win inside of following my trading plan. That's what gives me enough, like, that makes me content. I don't have to make money, I just have to follow my trading plan. So that's also different. You won't really overtrade because you don't really find the need. Like, you don't have to do it. So yeah, that's it for the day. See you guys.